Hey traders, Raghee here, and in this recap video for August 30th, we're going to be talking about what happened today, Thursday morning in the markets, and the kind of chop that we're seeing persist through the end of the month. So the first thing I want to share with you is an article and something you could check out, which talks about the tendencies we see at the end of each month, and I'm going to talk to you about why August is a little different. So the Wall Street Journal back in April of 2015 had an article that highlighted some research from Finnish researchers called Dash for Cash. And what it did is it flew in the face of what had at that time been more of a window dressing mentality, where we see the stock market rally as money managers might look for names that have outperformed during the month, and then they want to put those names into their portfolio in an effort to show their investors that they're overweighted in the things that are working, hence window dressing. But what those Finnish researchers found is that in reality, we're seeing redemptions begin about 8 days out and most intensely focus about 3 days out before the end of the month. Hence that end of month sell-off that seems to happen more often than not. But one of the things we're seeing this August, and this is not unusual for summer months, but what we're seeing is absolutely anemic volume right now. And so when the market's making brand new highs, I mean, Amazon crossed over the 2,000 threshold today. When the market's making brand new highs, S&P, NASDAQ, etc., we're seeing this happen on very low volume as compared to what we would normally see, what we will probably see come September. Doesn't make the prices any less real, but it will be very interesting to see that come the first week of September next month, whether or not the market's going to continue on with that kind of trajectory. My suspicion is probably not. So where does today, and how do we manage days like today? So as an end of day trader, as an investor, as a longer term trader, remember those tendencies, the end of the month, keep an eye on the volume, especially when we're in summer months, and keep an eye on the volume, especially when we're having a sell-off or any kind of new all-time high. You want to see what kind of participation is there, just to see how strong the sentiment is behind that kind of move. Well, today we were plagued in the morning by an immense amount of chop. And I want to talk about that for a moment because I still have a bullish bias. And I want to remind everybody, even as we go into September, I still am carrying with me a bullish bias. And what that means for those of you that don't know what I'm talking about is I am looking exclusively for buying opportunities as a short-term or day trader. In other words, we look to project lows, we look to buy those lows and look for the market to head higher. Today, we could not project the lows. Well, we couldn't see the market head down to those projected lows. We did project them, but the market would not head down there. So as soon as you see the market unwilling to break through near-term highs, but unwilling to get down to what would be very high probability support levels, you know you're likely dealing with some chop. So in those situations, the best thing to do, and you can see that right here, in fact, all that chop was happening in here. You find the best thing to do is look for what I call the halfback, or the 50% of the range move. Now, this is very much intraday trading. So for some of you that are asking, okay, Rag, what is intraday trading and do I even want to do it? You want to focus on a 60-minute time frame or less. That's number one. Number two, one of the main reasons a longer-term time frame trader might want to entertain the notion of looking at a short-term time frame is because we're not getting any kind of significant follow-through. So most of the traders in the morning focused on this zone in here. We can look at some of these, pushes lower into zones like this, midday. But you know what we did today? We realized the market, A, was not really following through, B, was trading on very low volume, and C, we're in an environment where the tendency is for the market to want to sell off, but the push-pull is the rhythm, the month-end rhythm of weakness, and yet all-time highs. What that spells out is exactly the kind of chop we're seeing here. I mean, a lot of chop and a slight tendency, as you can see, for a bit of a sell-off, which would still fall in line with that dash for cash research I mentioned already. So think about the seasonals of any type of end of week right? When I say seasonals, I'm just talking about these tendencies, right? In fact, I just assume you call them tendencies. They could be a tendency for the time of day, for the week, for the month, or even for the year. And it's these types of rhythms or tendencies. That's exactly what we're going to be talking about. And I'm going to be showing you how to capitalize on in my webinar next Thursday. Whether those are rhythms in Citigroup, whether those are rhythms in the Canadian dollar, which is something we traded today. We'll be talking about that in the premium video. Every market has a rhythm, a tendency of its own, and that volatility can be measured. And that is exactly what we're going to be talking about next Thursday the 6th at 7 p.m. Central, 8 Eastern. How the best entries come from understanding your exits. And understanding your exits is a big part of this volatility type calculation, this formula that I've found has worked for every single market, end of day or intraday, that I've ever traded. Forex, futures, stocks, options, third grade math. I think you guys are going to love it. Check out September 6th, 7 o'clock. Register here at simplertrading.co/exits. And I'll be teaching how to use this kind of data and project where the market's most likely to go, or in a case like today, keep from losing your shirt. Understand when it's more important to realize that patience is going to be what you want to exercise, and that flat is a position. It's almost the end of summer. We're coming into September next week, and I'm really looking forward to talking to you at that webinar on Thursday. See you in the next update.